Welcome to Strategy Saturday. I'm Charles Carillo, and today we're breaking down what the gross rent multiplier is, what it tells you when to use it, and the pitfalls many investors miss. So let's get started. Gross rent multiplier, or GRM, is a quick back-of-the-napkin valuation metric used in real estate to compare the price of an income-producing property to the amount of rental income it produces. The GRM is calculated by dividing the property's price or market value by its annual gross rental income. If a property is listed for $500,000 and it has a gross annual rental income of $100,000, the gross rent multiplier is 5. This means it hypothetically takes about 5 years of gross rental income to equal the property's purchase price. How is the gross rent multiplier used? Well, as a comparison tool, the GRM is most useful when comparing the same property type in the same market. Lower is better. A lower GRM generally indicates a potentially more attractive investment because a property generates a higher gross income relative to its price, suggesting a faster potential payback period on the purchase price. Valuation estimate. It helps to screen deals before more in-depth underwriting. And you can arrange the formula any way you want to estimate a property's value if you know the average GRM for comparable properties in the area. And the GRM is very helpful when you have limited rent or expense data on a property. The limitations of the gross rent multiplier. Well, it ignores expenses. The GRM does not account for operating expenses, such as property taxes, insurance, utilities, maintenance, and property management fees, which significantly affect a property's true profitability. It ignores CapEx. The GRM does not show what deferred maintenance or future CapEx, capital expenditure projects need to be completed, which could dramatically alter actual returns and valuation. It ignores vacancy. The calculation often assumes full occupancy and doesn't account for potential vacancy rates. It ignores debt servicing. The GRM does not include mortgages or financing in its calculations. So the gross rent multiplier is a simple metric used by real estate investors to estimate the value of an income-producing property relative to its potential gross annual rental income. Because of this, it's not a substitute for cap rates, cash-on-cash returns, or a full underwriting. It's just a simple comparison tool. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.